Hello, good morning. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of European markets at a morning update thus far. It's the 7th of December 2015. Okay, wish everybody a good week ahead. This video has been brought to you by CFDs.com. Be sure to visit their website. Alternatively, visit the educational site, which is www.cfds.education, to certainly learn more. Okay, in terms of price action and news flow this morning, okay, so we have the Asian markets more or less upbeat overnight. The Nikkei up by 1%, the Shanghai more or less flat, 0.3%, and Hang Seng negative, but more or less flat. So we have a more or less continuation of the obviously the rally, although not as substantial as expected, given the fact that the Shanghai was down was down at one point overnight before it actually rebounded. So it was negative at one point this morning. So the Hang Seng certainly finished negative. So not an overwhelming rally, nothing of any real importance, to be honest, given the fact that it's an inside bar and we're still within that bearish red candle from the 27th of November. So for the Shanghai, the Nikkei still remains subpar. Yes, we've had a bounce off the 200 MA, which was more or less expected, and obviously gap fill support as well. But that 20,000 level certainly remains the key resistance zone, and you've broken out the rising contracting wedge pattern as well. Now, the US markets rallied quite substantially, quite strongly on Friday, and the main reason for that was that Mr. Draghi gave a speech in New York, and he basically reiterated and jawboned the euro lower. And the euro is currently trading at 1.0820 now, after its stellar rally up from the 1.05 handle all the way up to 1.1. So it certainly is down. Mr. Draghi has done his job to a large extent. Hence the reason why the European obviously indices are certainly higher this morning. Now, US markets, very substantial, very impressive rally from the US market perspective. You can see the pivot low here on the Nasdaq at 4590, and we've certainly have had a rally now, as we can see, up to this 4720 level. So very important rally on the Nasdaq. But we are looking for consolidation now, because this thrust itself was quite substantial within a day, and you do have resistance in this zone. Hence the reason why we're expecting lower prices from here. The S&P 500 as well, if I just bring up a chart of the S&P 500, because it is very important to observe that. Bear with me whilst I just try and locate this. I cannot find it at present. Stocks 600 is there twice. It shouldn't be there twice. Okay, here we go. Right. So the S&P 500 daily chart, again back into potential resistance zone. On the 60-minute chart as well, you are into horizontal resistance on the S&P 500, and therefore you are looking at weakness going forward. That's my interpretation thus far. Okay, in terms of the actual market itself. Okay, so if the US markets are into resistance, that means European markets will certainly be into resistance as well. Now, in terms of news flow this morning, we've had weaker economic data out of Germany. Okay, so we had industrial production actually missing forecast, and that was certainly a bearish argument. Now, we do have the Centix investor confidence. That's certainly come out negative as well this morning, so that's not exactly a positive sign, even with all this QE. And there's talk of why the ECB basically failed to meet expectations, or explanation as to why Mr. Draghi failed to meet expectations, and that certainly is going to have a potential negative effect as well. Even though Mr. Draghi did attempt his best at trying to jawbone the euro, and certainly talk up QE prospects going forward, etc., and it's all about how the market reacts and how the market interprets that as well. We did have Mr. Ray Dalio on the weekend trying to support Mr. Draghi and saying that don't attempt to fade him, i.e. don't short European equities, and don't go long the euro, and he was trying to basically reverse the whole QE trade, i.e. basically send the euro lower and obviously send equities higher, which obviously has been the opposite case scenario as of late. So again, he certainly is trying to his best. So you are trying to get hedge fund managers now trying to talk the markets up as well. It's an interesting, and we'll see exactly how much of an effect that has today. Now, we've had this rally this morning, and let's see exactly where we are technically speaking. Now, let's bring up the chart of the Euro stocks. Okay, so you have a pivot low here, and you had this thrust higher of previous resistance, equal support and horizontal support. and it's basically how long can we sustain this rally for. Yes, we are lagging still on European indices, and it certainly is not a good sign from my perspective, given the fact that we are lagging. If anything, we should be leading to a large extent. So again, that's something that we have to take into consideration. Now, we've had this thrust higher here up to 3385. Now we are looking for a potential move, potential retest of the 3350 zone, and we'll see whether we can make an onslaught for the 3420. That's going to be interesting. Okay, in terms of the actual DAX itself, the German DAX still, I mean, we've had a bounce off the horizontal support. We have the unfilled gap below that needs to be closed. So again, that certainly is vulnerable. We've had a rally, quite an impressive rally off this double bottom support here, and we are now approaching the fib 50% resistance. Now, there is an important pattern on the 10-minute chart. You have this inverted head and shoulders formation with a target of 10,890. Obviously, we've surpassed that target now, and you are looking for a potential retrace before we attempt to make a new high. That's my interpretation thus far. Given the fact that we've had weaker economic data as well, that's certainly going to weigh on the European indices. Okay. Now, in terms of the French CAC, let's just bring up the French CAC itself. Yes, we've had a thrust higher. We do have an unfilled gap below though, so that's something that you have to remain vigilant of, and the market can be vulnerable at closing that gap at any time. So again, that's something that we're going to take into consideration. Now, the FTSE 100. Okay, so the excuse me, FTSE 100. Yes, we are back into that resistance zone at the 46277 level. Again, that's going to be key resistance on the FTSE, which I explained in my video. And you are looking at resistance here at 6276 again. You have the unfilled gap above. That unfilled gap can't close today, mainly because number one, Shanghai is flat. Number two, we have terrorism concerns over the weekend. We have flood concerns over the weekend. So we have the floods will certainly hurt GDP going forward, and obviously terrorism concerns again will create fear and uncertainty, and that will keep the FTSE 100 at bay. Not only that, we have oil still languishing at the lows post OPEC as well. So oil is currently trading at $38. Copper is starting to move lower as well. Okay, so this is all bearish news for the actual FTSE itself, and therefore hence the reason why we are unable to close that gap above, from my understanding. Unless we start to see a base in oil and a thrust higher, then we may have a chance and a possibility at closing that gap. Okay, and now the FTSE on a 60-minute chart is into resistance. If obviously we break and surpass this resistance zone, then the next resistance zone is 6310 and 6320. But I can't see that occurring unless oil starts to make a potential base. Yes, we are holding that horizontal support at 6220, and that's going to be key and absolutely crucial. If oil continues to make a new low, then you are going to break this support zone, and the next level is going to be 6100 on the FTSE itself. Okay, I think that's a good summation. Be sure to visit cfds.com for your trading needs, and I wish you a good trading week. Goodbye now.